Welcome to StockMarketPending.com. Today is Wednesday, and it just so happens to be 7/14/2010 at options expiration week. Imagine that again. This is our favorite week of the month. It's the most enjoyable time for us because we get to make great moves on both sides of the market. This is a 480 call for July expiration. That was $18 on the high, closed at 17.20. Wholesale bid was 15. The put option, which is in a different range, it's a 490 put, slightly in the money. And basically the name put in a 491.49 on Google. So a Google 480 call with a back end trade of that 490 put. And they're going to report earnings tomorrow. Well, that's tomorrow. Tomorrow's not here. Today is right now. And price action is being tradable in both sides of both strike prices. 480 call, 490 put. Google is weak. It makes a high of 491.49. If you go to StockMarketFunding.com and you go look at the Intel earnings reports, and you also look at the after hours action futures market, after hours futures, is that we shorted that stock up there, that 495, and young Scotty was in here. Apple was the same way. They gapped everything up on those great Intel earnings. However, the overall broader market, it's not responding. Why? Because you have to stay tuned. And on Saturday mornings, we will have the SMF eye on the economy and SMF eye on the earnings season. And the most important thing that you want to learn here at SMF is how to go through that earnings season and understand what a conference call is, and understand what analysts are looking for, understand where growth is, understand all kinds of wonderful things that there is to understand. In that respect, in its own module unit that we have, it addresses that. We have our trading module. Well, that's a wonderful thing. So basically, as a market maker, is I'm looking at where I can buy both ends as wholesale as I can, while the equity price is printing within its the low is 486, 4.46. So I'm a couple dollars already up off that low. So that's telling me that there's a little bit of strength in the name. And buying 90 pennies off the low, that's not the greatest entry. 15.20 is a better entry. However, if we don't hold that price action here, naturally we're going to lose value over here. And this value of the 490 put would go higher. So what we want you to understand is that SMF is a master at trading both sides of the market, so that you're getting a positive debit here, and at the right time when weakness and failure comes in here, you're buying this. It was already 1060 on the low. It's already bounced $1.40 off the bottom on the 490 put. And this is how it's traded. So that put option, the high, was 1330, because on the opening bell you hit 491.49 and the close was 1160. So therefore, that's what made the intraday 1330 high, and then you drop down to the wholesale entry at 1060 and you just made one nice profit. And the way that this economy is, folks, and I over here, because we want to go higher, I bought some contracts over here. So when this goes up in value, when it holds, I make money. And we're very good at getting this lower end wholesale. It's $3 lower than what the market price was, based on the equity price that populates the price prints in both markets. Call market, put market, options, sliding the bid down, buying, price to equity movement, all of it's factored in here. So basically, I'm going to move these two things out of the way for now. And the next thing that I want to make sure that you are comprehensible about is one thing. I'm going to show the July put chart. This put chart right here is a July 490 put. It was inflated up here at $50 a share, but now for the expiration, it's all the way back down here. That put option there made a lot of money during this time frame. A lot of money. But it also went right back down. And basically, when this is happening here, then that's when you really want to be a big owner of the call. Because if this is going down, then the call would be rising. And that's the gift about that. Here is a 15-minute chart on that 490 put up here. Also, you can see what it's doing on the 490 put. You can see it right here on this chart. This is a 15-minute chart, and it's got price action in it. So basically, what you're seeing here is that the put option had put a low in, and then moved up and now is pulling back. So that means that the call side of the market, which is the one that I showed you, they're 1630 by 1650. So when that contract goes higher, we will sell, and then we'll buy that put option right here that we told you about at the low prices again. And we'll see what the trend on an intraday market maker level only. Okay? Welcome to stockmarketpunding.com. The 480 call, my friends, which I want to make sure that you see the complete snapshot of that chart, is, let's take a look. Somehow, here it is. Let's put the 480 call right there. And now that we have that here, it's on a 15-minute chart. But what I want to show you is that back here is when the calls were cheap. And we're going into an earnings report on Thursday. We had already bought and sold these moves. And the thing about it is that the 480 call is by no stretch of the imagination wholesale. It's way up here at the tops. Yes, they can go higher, but you needed to be down in here. And then you needed to be selling up and getting out of the risk of the earnings on Google. And so I'm just letting people know that this side of the market's up in the inflated area, which is the 480 call versus the 490 put option chart right here. So there is both moves. Let's take a look and blow that one up for you so you can see it clearly. Now, look at this one here. And the wonderful thing about being in the school is that you're going to learn how to operate this way. And that way you're always getting positive moves on both sides of the market intraday. When Google wants to go up, you buy it long as well. So the stock goes up in price and the calls go up. You're making 2 times the money, which is nice. And then you're looking at getting back below the market at another wholesale bid on the 490 put, which I'm showing you right here. This is that 15-minute chart right here, or the 60-minute chart. And that's that put option down here. And it's at the deflated area versus the inflated price of that call. That's way up here on the top side of the market. Even though you're going into the earnings, it doesn't matter. The risk remains up here. And hey, you need to be selling. If you bought down here like we did, we're closing it out and taking our money. But we're also constantly looking at the low end of this contract, because the put option came off of these lows intraday. That's that 490 put, see? Buying it down there at those bottoms. And anyway, that's the call. Options expiration on Google. 7:24 a.m. Pacific Standard Time. Stock market hasn't even been open an hour yet.